What the hell is going on, guys? It's your trade bro here. We are in a very good spot. I don't think serious traders really predicted that we'd see this price until a real announcement was made. As you can see, we're looking at the weekly chart. We've been building levels ever since about December of last year. This has been this whole year of just this slow, steady climb, making these levels, building out this volume profile here. You can see we touched it here yesterday. If you look back on the video that I posted last night, you will see that we were a small little candle starting here, and then Sunday night was an absolute banger, going up to 30,800, and then today we'll jump down to a smaller time frame. We're up 10%, as you can see over here on the watch list. We popped all the way up to 34,800. Right now it seems as though we're building out levels here, and then maybe we move higher from here. I'm watching it very closely, as I know probably many of you guys are too, but this is very exciting news. I mean, if you've been in crypto for, if you just got into crypto, if you've been around for a little bit, if you've been around for a couple of years, if you've been around since the beginning, this is very exciting news. You can pop over to the 5-minute chart right here and see we're just starting to build up. They say we probably come to down here before we start moving back up again. But this is, it's all, I think most of it is based off of the ETF excitement. You know, we're seeing a lot of interviews from rich people, from corporations, from investment firms and stuff, telling us basically what we've already known for a while, that Bitcoin is the real hard asset, the only real hard asset, because gold is a falsified hard asset. And rich people want it. They've been wanting to touch it, but they can't do so without a regulatory blessing. They're not gonna move trillions of dollars around, just and have the SEC come out tomorrow and ban this thing, and then all of a sudden they've got lots and lots of money locked up in something that they can't touch anymore. So this ETF is a real blessing. It's going to make it easier for people that not even just institutional investors. We're talking just regular everyday investors as well. To buy Bitcoin, you don't have to make a wallet anymore. You just have to buy the ETF, and they'll store it and take care of it for you. So that's absolutely huge for Bitcoin. And we can see if we pop over to this article that I have open here. Bitcoin ETF to trigger massive demand from institutions. EY says EY is Ernst & Young. They're a professional service provider, and their blockchain executive was on CNBC on their crypto decrypted thing, saying, if you look at people who are buying Bitcoin, they are buying it as an asset. They are not buying it as a payment tool. Those who are buying Ethereum are buying it as a computing platform for business transactions and DeFi services. Brody's remarks come as global investors closely watch the crypto regulatory process by the U.S. Securities and Exchange Commission, which has not approved a single spot Bitcoin ETF so far. A number of companies, including Grayscale Investments, ARK Invest, BlackRock, and Fidelity, these are huge names, guys, have filed for multiple Bitcoin ETF products and are awaiting a regulatory response. So once this goes through, and it's looking pretty likely that the SEC is going to approve a bunch of them at the same time, just to eliminate that first mover advantage, kind of trying to avoid a monopoly, which is weird for the SEC because it's usually the stuff they like. But yeah, it's absolutely massive. You can see we broke through it. We had some slight resistance here at this level, popped right through that, and then we popped right up through here, touching the wicks of these candles, that we haven't seen since February 2022. So it's been a while for sure. We just touched that level. Obviously, after a big pump, we're gonna have a little bit of a dip. We got to build it out a little bit to make it healthy, and it can go back up. But I'm not really sure where like I said last night, I kind of broke my trading rules. I saw a big wick on a candle go up to 32,000, so I just kind of aped in there. We're doing good on that trade. I'm just trying to figure out where I'm going to close the trade out at. Right now, I'm thinking that if I watch this and it climbs back up to 34, we'll watch this climb very closely. If it climbs back up to 34, then we'll see what it does when it touches that level, and that might be out for me for now. Just so I'm gonna go back in, obviously, but if it double tops there, then we'll be out. If it smashes through it again, then probably see what the next resistance level is gonna be and stay in. But we're looking pretty good right now with the trade. We're just trying to, deal with the emotion, set a price target, because honestly, my exit price when I got in was going to be the tops of these candles. But once it got to the tops of these candles, or the wicks, it was just moving so well that it didn't seem like it was worth it to pop out of there. So we just stayed in, and thank goodness I did, because we're up pretty good right now in this trade. For the 4 people that watch these videos, if you jumped in last night or whatever, then you're making a good little return. And what's weird, if you've been in crypto for a while, usually when you look at crypto charts, especially when Bitcoin's doing its thing, the biggest mover is usually not Bitcoin. If we go down here, and these aren't all of them, we got Dogecoin, Elon Coin, Dogecoin Mars, up 20%, and everything else we're up good percents. If the Dixie's down to 105, previously at 106, obviously the adverse correlation there. But I mean, we're moving pretty good. But yeah, it's weird to see Bitcoin as the biggest percentage mover among the top altcoins. I'll take it. It's awesome, especially as somebody that only short-term trades Bitcoin. It's nice to see, but it's also a crazy thing. And I think this bull market is going to be a little bit different as far as what gets attention, because institutional money is a lot different than retail money. Retail money pushed this stuff, and partially institutional money from those who were brave enough to enter the space early. They go after different things, so I don't think, of course we're gonna see some random altcoins, pump unbelievably. That's just gonna be just kind of how it is with every market. But I don't think we'll see it to the extent that we saw before. I think we're going to see a lot more concentration in the more approved products, because the ETF is going to be Bitcoin. Someone, Grayscale, put out, or I think it was Grayscale, or somebody put out a Bitcoin or an Ethereum futures ETF. I think just laying out the argument for an Ethereum futures, or a spot Ethereum ETF. So I think the concentration is mainly going to be in the top most proven altcoins, which is cool, and especially in Bitcoin, because I think a lot of people have been saying it. If you've been listening to any sort of financial news, we had Larry Fink, who is the CEO of BlackRock, the largest asset manager in the world, saying that he sees Bitcoin as a flight to quality, and sees a lot of his clients wanting this flight to quality, a hedge against inflation, because these rich people, when you have this much money, you have teams of people managing your money. It's not just like, you and me out here aping our stuff around by ourselves. You got a 20-person team of people just to move your money around and find future investments and stuff. So they know that what gold is, and they're part of the people that perpetuate the lie that it's a hard asset. It's definitely not a hard asset at all whatsoever. It's false. So they know this, and these people are intelligent. And when you look at this thing, and it's proved itself over the past 10 years, the network's proven itself to stay stable. Even, I mean, the biggest test for any asset class was COVID, and Bitcoin obviously rocketed right through. And then, there was someone I knew that was investing when Bitcoin hit 20,000, and it's just a stupid fad, just a stupid fad. And I started looking into it, and after it went back down to like 13 or 9, and came back up, and after COVID and tested that's a huge thing for an asset to recover the price. It's one thing. It's one thing for something to pump and dump. It's another thing for an asset to go from what Bitcoin started at and go to 69,000, then go all the way back down to 17,000, have ancillary problems as far as FTX, Grayscale, the SEC, and recently DCG and Gemini, all these issues that aren't Bitcoin specific but are in the crypto space, and push those to the side and still do its thing and still climb, because the code is the code and Bitcoin is what it is, and you're not going to change that. So I think that the very intelligent people on their staffs have realized this, and they're going to be moving in. I mean, if we pop back over here to this article that I have pulled up, where is it? Pent-up demand not approving a swap is for years. Brody discussed the outlook for cryptocurrency adoption on CNBC's Crypto Decrypted on October 23rd, declaring that trillions of dollars in institutional money are waiting to enter Bitcoin once it's approved. Now, one thing we do have to be privy of, seeing these big pumps and stuff, if we see the big pump before the real news comes, institutional money is not dumb, and they want a good price. They're not just gonna, unless they really see this, unless they really send this to the moon, and because they're looking for these Bitcoin-like gains, we might be looking at a buy the rumor, sell the news type of thing. So we'll keep an eye out for that, especially seeing these big pumps before the news comes out. Because these institutional investors, man, if you've been in stocks before, like I have, they play around with this stuff, and they're not afraid to wait a little bit. They're not as apish as we are as far as getting into assets and stuff like this. They're not gonna want to, if Bitcoin's at, let's say we continue this rate of expansion, and we hit, the next real resistance is going to be at 38,000. They say we fall somewhere from the 40 to 38,000 mark here, just in that channel. They're going to be looking at all this, and want that. So they might make the launch a little bit disappointing. They might do the institutional money thing, kind of dick it around a little bit, and then build out, and then buy in over time, and then shoot it up. And it might be a slow gradual thing, because everybody notices, everyone is going to be talking about Bitcoin going up 10% today. That's huge. 10% on a day, when the average expected return of the stock market on an annualized basis is 7 to 8%, in an inflationary environment where it's more like 3 to 2% after you factor in inflation. This is huge. But if they go up 1 to 2% every single day, no one's going to be talking about that. So we got to be aware that once institutional money starts getting its dirty, grimy little hands all over sweet little Bitcoin, that they're going to start playing games with us. But that's it for right now, guys. We're looking at very closely. We're watching. We're making sure we stay smart, we stay educated, and stay calm out here. Obviously, if you guys are trading, this is not financial advice. But if you are trading, under all your own research and decisions, stuff like that, now that things are more volatile, you're going to have to adjust your risk basis. So when we're down here and we're chopping, you have to hike up your risk in order to get something out of it. When we're making big moves like this, you can obviously see if we try to chase these candles and we had too much risk in here, that's a big swing. That'll liquidate pretty much anyone. So you have to be really, really smart. You don't, when you're here and you see the big green dildo pop out, you're gonna get excited. I know a lot of you guys are excited for big dildos. You're gonna get excited. You're gonna want to see it, but you gotta wait. Catch this retest here. You're not gonna catch the absolute bottom, but catch the retest. Wait in here. If you were here and you saw this happen, I would try to wait. Catch this retest here. Adjust your risk and let it build the levels out. You see how it's building the levels out right now? Because there's the people that are starting to move into this again. They're smart. They know that they have to build the levels out, because if it starts selling off for whatever reason, they want something to catch it. They want a safety net. They want a suicide net, and that's what they're building right now. So stay safe out there. Stay smart. And again, this is not financial advice. Have a great day, guys. This has been your Trade Bro. Peace.